Well, welcome to our Post Intuit Connect App Academy. Excited that you're here. We have a great lineup of presenters today. Next up is Avalara. We have Chris and John joining us. Very familiar faces from my neck of the woods. Hi, guys.
Hey, how you doing?
Yeah. Hey, Amy. Hey, Murph.
Hi.
Do you have
hi.
a quick question before you get started? Do you have slides for your poll so I know when to launch them?
Yes, we
Okay.
do.
Let me see if this works. We're gonna do this one. Share.
Yep, we see that.
Awesome.
Go ahead, John.
Oh, hey, no worries. Thank you, everyone. Sorry we were scrambling there at the little beginning. But we're gonna just walk through a couple of things here. First, we're gonna talk about Avalara from the accountant point of view here and what Avalara has from tools. Then we're gonna go through and talk about QBO and Avatax and how the two systems work together. Hopefully, again, making it sound exhilarating to talk about taxes. We're gonna go into some tax return and tax return filings. We're gonna talk about some of our research products, if you wanna do some tax research, and then obviously some key takeaways, and we'll have a little bit of Q&A if available through the Q&A section on the, like I was gonna say the browser, but the Zoom meeting. First, let's go into the tools that we have for accountants, and quickly, just to let everyone know who's on the phone. My name's John Sleece. I'm the director of our accountant solutions and partnerships here at Avalara. I've been doing taxes for about 30 years, focusing in sort of on the tax automation piece for the past 22 or so. And also on the phone with me.
I'm Christopher, and I manage our QuickBooks relationships, our sales team that has our QuickBooks relationship. And then also I have been doing sales tax for about 10 years, longer than I ever thought I would. So here we are.
Go ahead.
Yeah. And so this, just a little bit about Avalara. We've been around for about 20 years. We handle a lot of sales tax documents, a lot of payments. We do a lot of sales tax determinations, serving over 30,000 customers in 96 countries, and we have offices all over the world. So really what this slide says is we've been there, we are there, and we're continuing to grow to help our clients. And then this is one of my favorite slides. It's really just saying like, hey, why do I even care? Murph, you gave us a great intro as to why people should care. But this is what, we've had a third party come and do some research for us, and this is what they've come up with. Just that sales tax is such a painful and time-consuming process for companies. Audit risk is very high. States are very interested in sales tax revenue because it is one of the leading sources of revenue for states. And instead of wanting to balance budgets, they want to continue to get more and more money. So they're getting more creative with how they are calculating and obtaining sales tax. And so this slide just really kind of points out what is that risk and what are your clients actually paying to be able to keep up with sales tax manually.
Interesting way you put that, Puffs. It's like, when states, no one ever gets elected, and we just finished the election here, but no one ever gets elected by saying, hey, we're going to increase the tax rate so you guys pay more in order to meet budget gaps. They don't usually say that. They usually say we're going to enforce compliance, because that's usually a more user-friendly platform to get elected on.
Tomato, right?
Yeah. Yeah, no worries.
Or they use that word that nobody understands, economic nexus. And then,
Yeah.
oh, we're going to do economic nexus. Boy, that's going to be our revenue source. Or we're going to change and enhance our economic nexus. We're going to pull more money from everyone else.
Exactly. More specifically, we're going to pull money from the constituents that are not in our state, right? That's where they're kind of going with that. And to say that a little differently here, so Avalara, as we just talked about sales tax, and it can be a little time consuming. And, Avalara has many tools and ways we can help firms with that compliance. And what Avalara has is we have Avalara for Accounts, and it's a methodology we have to help firms manage it. And we actually handle it 3 different ways, and you can see the little chart here on the side. We like to put everything into a big circle, right? But when you look at that circle, there's a few ways we can help. And Avalara can help. You can certainly, if you have clients with sales tax needs, you can certainly refer them to us, right? You can refer clients to us, and we can certainly address their tax automation needs. This is typically, we do this with calculation with QuickBooks. So you want to refer them to us, you want to help us calculate taxes with QuickBooks. It can also be related to returns filing. You might not want to deal with returns filing at all. I just want to give it to us and have Avalara handle it. We can certainly do that. The other way we help firms out is you might want to help your firms implement that solution. So you might refer them to us and say, hey, we don't want to deal with sales taxes in QuickBooks. We just don't want to deal with it. But we might want to implement the solution because we don't want to spend the time updating the rates. But we might, hey, Avalara, go ahead, calculate the taxes. But me as the firm, I want to set them up and implement it so that they're calculating taxes correctly. And we have some programs we'll send you through if you want to get certified on our platforms to calculate taxes with us. And additionally, we also have a tools channel, and these are tools we'll offer to help firms perform their services. And that could be research tools. We have research tools in the system so that if your clients are coming back and they're asking you about specific rates, maybe they're not using AvaTax to calculate taxes, but they have questions about specific rates, product taxability, how states handle certain things from a returns filing perspective. All that stuff can be handled in some of the research tools we have. Additionally, if you're looking to use us, if you file returns yourself and you want to manage that process, Avalara has some tools to help you manage returns filing as well. And this is the Avalara for Accountants Compliance Suite. So again, if you want to use our tools to help your clients and our tools to help perform the services that you're doing, we have services in there from a tax research and voluntary disclosure perspective. Avalara also offers tools in the business license section. So if you have a method that you do registrations or business licenses for your clients and you want some of the tools Avalara has to you as a firm to perform those services, you can certainly do that, and Avalara will help you get those registrations done. Or again, you can refer the client to us and we'll do those registrations for you.
And John, that's one of the biggest things we see on the sales side is when the client prospects come in or call into Avalara, they have no idea about, Murph, you're talking about economic nexus. They have no idea about their requirements state to state. And a lot of times what we're seeing is these companies have created this unknowing liability, or they're unaware of the liability that they've created state by state. And so that's one of the first conversations that we have is around understanding their nexus requirements and where they've created that link to the state.
I think one of the very first interactions I had with Avalara years ago was where a client of mine had started selling outside, and they were doing considerable amount of sales. They got a letter from the tax authority of a particular state, and the tax authority had actually done a sales tax compliance audit of a customer of my client in that other state, and they came back and said, sent this notice saying, you haven't even registered with us, and we know already that you have a liability. So, that was the first time that I turned to Avalara to get it all straightened out. And yeah. So
all good. I appreciate that.
A lot of people don't even know that they have to register. They don't know they have a liability, and they don't know they have to register. And then, of course, they have to report, return, and remit.
Yeah. I appreciate that. And that actually goes into this quote right here. A lot of firms that turn to us, or a lot of clients that turn to us, realize they're not spending that time trying to figure things out. Avalara has tools that they can put in place to help you figure it out. And we typically, and we've got some quotes in here, but we've noticed that people do experience a 42% increase. We've had a 42% increase in returns each year from the past 2 years, and now we're getting it done much quicker utilizing our services here.
Mhm.
Managing sales tax compliance with QuickBooks, because now we got the Intuit crowd on the phone.
Yeah, absolutely. And so this kind of leads to the slide we showed a little earlier. The biggest thing that we see initially is just understanding where you have created that tax liability. Then, super important, you need to get registered before you start collecting tax. States typically don't smile upon collection of tax if you don't have a way to pay it back. Then, it's very important that you make that correct tax determination or correct tax calculation. That's the piece where there's over 13,000 jurisdictions, and John has some fun slides after this to talk about some of the fun calculation rules, I guess as fun as it gets. Then if you're not collecting tax, super important to prove why you're not collecting tax. And that's where the managed tax exemptions come in. So tracking and managing exempt sales, you have to have that piece of paper to prove why you're not collecting tax. And then lastly, the thing that the states really only care about is that you are paying them that money. You're paying that money to them on time, correct, and it is the right amount. And that was where it comes to the remittance piece.
And this is kind of going in a little bit to, can you guess, right? And this goes back to tax research, right? When you have a customer, they're just charging taxes in one state, they typically know how to tax the items that they're selling, right? If you're selling, we're using the example here, powdered beverage mixes. But if you're selling this all in one state, usually your tax rules in the state that you're in. But if you started, this sounds weird saying this, if you were going to start shipping powdered drink mixes across the US because you didn't want to pay for the extra weight of the water associated with it, right? You're shipping it across the US, you probably don't know all the tax rules in all the different states on how to tax these items. And the funny thing is, and I know we just came off the election, so this is probably a good time to introduce it, but a lot of this is dictated by politics within the state, right? Specifically for this, because the states are always trying to figure out, am I selling a staple? So if I'm walking into a grocery store and I'm buying something, is that a staple? Is that something we shouldn't be taxing because it's a staple? And then the next question, we're like, well, is buying a soda a staple, or is buying milk the same thing as buying a soda? It comes up, right? So the state says, well, we really shouldn't tax milk, but maybe we should tax the soda, or maybe we should tax the sugary beverage, because that's really not a staple in the state. And that's where a lot of these rules come in that we're especially around food. But can you guess? Anyone? I don't. No one can really respond back to me, but maybe. But
Let's write it
let me
down.
ask. Let me ask. New
And
York.
then there's the question of, is the sugary drink, if you take the water out of it and you only have it come in a little foil tear off that they pour in their own water, is that taxable?
Yeah.
So yeah, you've got all those issues. And again, so many people think, oh, you just calculate the tax by the location. It doesn't matter what the product is. And certainly that's not true at all. You've got to have all of those pieces correct in order to be
And
doing the right thing.
exactly. And that's, let's hit this one. That's a good way to segue, because which one's exempt? And you know what? Tang's exempt, and that's because they're probably thinking it's orange juice, and so it should be considered a staple and we shouldn't tax it, even though
No.
there's probably a ton of sugar in there.
Are you sure it's not because Tang is on the moon, John? There's no
Yeah,
sales tax on the moon.
yeah, exactly. That's exactly why.
Well, cool. So this is one of my favorite slides, just because of these crazy tax rules state by state. And I like to say everything's bigger in Texas. Hopefully no one on this call takes offense to that, but they do not they tax exempt donuts if you buy more than 5. So everything's bigger, including your waistline. Down there, you save money. Other things that are interesting, bagels in New York. New York has a sandwich tax. So technically hot dogs are taxable because they're considered a sandwich. I just answered that question for you. You're welcome. I know it was coming. But that's why a sliced bagel is considered taxable, because a sliced bagel would then be considered a sandwich. And I'll let you read the rest of these as we can kind of move on through this, but it just talks to the crazy tax laws state by state.
A few years ago, for 2 years in a row, I wrote a weekly article in conjunction with you all about, we called it Sales Tax Tuesday. And the first year was just kind of generalized stuff. But the second year, we took, if you went to your favorite diner or favorite steakhouse or favorite this, that, or the other, what components of that actually were going to be taxable, or if you went looking for buying a hamburger at a restaurant versus, the components of a hamburger, what was taxable, etc., on a state by state basis. And I can say that there's so much confusion over it.
Yeah, I call it job security. If you want to see how this looks inside of QuickBooks, I just wanted to show this real quick. This is just a screenshot of how we calculate tax with QuickBooks, and just say it real quick. What happens is you hook up Avalara to QuickBooks. As you can probably imagine, there's a little wizard process you go through to set the system up. You basically make the two systems talk to each other. And what QuickBooks does, or any e-commerce system that hooks up to us, they send the ship to address that you're shipping or sending the product to. They send the types of products and services that you're selling. And then inside of our system, we match up the SKUs of the products and services that you're selling. We look at the ship to address, and then we look up what the tax rate needs to be and if the item is taxable or not. We calculate those taxes and we send it back to QuickBooks. In this case, you'll see a line here for sales tax. So we sent over a curved claw hammer over to our system. It calculated taxes, and we inserted a tax line here for $1.64. When this transaction's posted in the system, this is kind of giving a little view here, but we send that taxes over to our system. We're calculating taxes with QuickBooks in this case. When that invoice is posted in QuickBooks, it actually updates our system with the $1.64 in tax, and it updates QuickBooks with the $1.64 in tax. And the reason why we do that is we want to be able to run a report in Avalara that will match the general ledger inside of QuickBooks. And the reason why we do that is you want to use our system's can usually contain more detailed information about taxes. Avalara is going to not just keep track of the fact we calculated $1.64 in tax. We're also going to keep track of what the state allocation amount is for that tax, what the local allocation amounts are for that tax. We store all that information in here, and then there's reports that you can run in our system. And if you're looking to do tax returns with us, you can certainly do the tax returns with us. Anything you wanted to add there, Chris?
No, it's just, it's very, very streamlined on our side. And I think now leads to our second poll question, right? There it
Yes,
is.
as a matter of fact.
Poll number 2, how engaged are you with sales tax returns? And this question kind of gives us a feel of where to take the conversation next. So thank you, Amy.
I think tax returns is probably the most exciting part of the entire conversation, right?
Of
I
course.
was gonna go with 1099s, but
Got it. Okay.
if you want tax returns, you can have them, John.
When I've worked for a couple of tax software companies, and you know, when you're there, it's like within inside of the organization, there are people that really care about calculation, and then there are people that really care about the tax return. So you've always got your two different groups inside of the organization. I tend to care more about the tax return. My whole theory behind that is, oh, I don't see the results. That's right.
Sorry, I forgot to share the results.
That's right.
Oh, that's okay.
You're good.
We'll
You're
just
good.
go. We know the results in our hearts, deep in our hearts.
The reason why we're showing this slide and we're talking about returns is remitting sales tax to the tax authority is probably the most mundane part of the process, right? You've calculated the tax, you've sent it to your customer, they've seen the customer has seen and paid the invoice, right? That $1.64 that we calculated in tax in QuickBooks, we want to make sure that gets to the right state and local agency. But when you're calculating taxes and you're paying it, you know, again, you can pay that across the US, right? And each state has their little nuances on how things need to be paid. You're all familiar with federal income taxes, and you probably all know they're all paid annually, right? Everyone remembers October 15th, but sales taxes are paid October 15th, listen to me, April 15th for income tax. But sales taxes are generally paid monthly or quarterly. Each state sort of has their own little nuances on when they want things paid. They also have different ways they want you to file and pay. Some of them want you to do it online. Other want you to mail in not a lot of states are asking for a paper return anymore, but they also vary on due dates. A lot of states are due on the 20th of the following month, or could be a derivative of that. Some states, when you start hitting certain volumes, like you start paying a lot to the state in sales taxes, they actually have a concept called prepayments that kick in. You have to basically advance pay your taxes. A lot of retailers fall in that bucket when they start paying a lot of taxes. And then, of course, when things don't go right, or there's problems, or the state has questions, they send you notices to ask you certain questions or clarify certain items. But suffice to say, I got 4 minutes left, suffice to say it can get a little involved.
So John, if you're cool with it, let's kind of roll to 1099s because I know that's a hot topic right now. Are you okay with that?
Yep.
And Amy, we can make this poll super quick. We don't need to wait the whole time. But I
All
know
right.
with 1099 season right around the corner, and we were just at Intuit Connect, and it seemed like every other person that was coming up was talking about 1099. So I just want to make sure we have an opportunity to touch on that.
Go for it.
Oh, that's my favorite part, right? So what is a 1099? So this is a form that you file for with the IRS. This is talking about paid income to employees that are not full-time, so typically contracted employees. And these are things that have to be renewed year over year, filed with the IRS for income tax purposes. So probably I would have to assume everyone on this call is pretty familiar with 1099s and knowing that those are going to be due in about a month and a half to 2 months.
And the importance of getting that W-9 done ahead of time so you make sure you have the right number to report on the 1099, right?
Yeah, absolutely. Absolutely.
What happens if you don't collect the W-9, right? That's what we're kind of talking about right now. There's fines and penalties associated with that. If you file a 1099 with an incorrect tax ID, there's some ramifications associated with that. And if the business is storing W-9s themselves, you need to make sure they're available, right? I have a lot of companies when we talk about this, they tend not to want to do the W-9 throughout the year. They try to cram those W-9s right towards the end of the year and send out all the requests for it. And they generally run out of time to meet the deadline for filing the 1099 next year in January, which are due January 31st. It's a time suck. Avalara does offer some solutions around 1099s and W-9s. They actually integrations, we have several integrations with the 1099 application, and you can actually either direct import that 1099 information from QuickBooks into our product, and we can actually automate the generation of the emails to the end, I guess, your end vendors to produce that documentation, and we can also help you manage the W-9s through that process. If you're not doing a direct connection with your AP process with the 1099 system, you can certainly upload files to our system with that 1099 information, and we give a nice little portal for your vendors to log into in order to pull down the information they need. Anything you wanted to add?
No, this
No.
is fantastic.
We hit our time.
I'll also toss in here that you all have the solution whereby vendors that are sales tax exempt, you can bring in their sales tax exemption and keep it on file and record. And that's critically important too, because a lot of people never bother to keep I'll get it, and never do it. And then they get a sales tax audit. Where's all those exemption certificates? So.
Yeah. And
The
I
magic
actually have
is
a funny story about that, because I was in the manufacturing space for a while and had a client that came up to us year over year to the trade shows, and they're like, "Oh, we love Avalara, but we just don't need you guys because we're all tax exempt." And about the fourth year, he's like, "Hey, we really needed Avalara 3 months ago because we just got audited by the state of Washington, and we had collected some business licenses, we had collected some tax exemptions for other states, and come to find out, we even had a picture of someone's cat in our filing cabinet, and ended up getting a pretty hefty fine because fat cats are not tax exempt, unfortunately." But yeah, and then John,
all good.
if we had one more takeaway poll, I believe,
Yes, you do. Here
and
we
then don't want
go.
to take any time from anyone else, but
Oh, I already pulled it. Is it up on the screen? Oh, there it is.
It is.
it is.
Next
Well,
steps.
thank you so much. Yes. Thank you so much for joining us for the Post Intuit Connect App Academy. We truly appreciate you sharing all this amazing information and how no one should be doing sales tax or dealing with sales tax in their life.
Awesome.
That's,
Hey, thank you.
that's the end.
Thanks, Amy. Thanks,
You're
Murph.
welcome. All right.
All right, cheers.
Thank you, guys.
Bye,
You too.
everyone.
Bye-bye.